Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Kim Sei-wan, professor of economics at Ewha Womans University. Professor Kim, good afternoon. Thanks for coming on today.
Good afternoon, Devin.
Well, last year, data now show the Korean economy grew by 4%, meeting the government's target and marking the best growth in 11 years. That's a turnaround from the contraction seen the year before when the pandemic started. Still lots of risks out there, though. What do you make of the figures on growth last year?
According to Bank of Korea, the GDP, or gross domestic product, is estimated to have grown 4% in 2021. Making a turnaround from a year earlier when the economy contracted 0.9%, the worst performance since 1998. As consumption and exports bounced back from the pandemic-caused slump last year, and this year is the highest in 11 years. Bank of Korea says the government's 2 times of extra budget of around 50 trillion won, or $42 billion US, and high vaccination rates and rebounding exports were major factors that contributed to the overall upward trends in economic growth. The data showed that almost all major components of GDP expanded last year. Private consumption expanded 3.6%, and facility investment gained 8.3%. Government spending rose 5.5%, and export jumped 9.7% last year. However, investment in construction shrank 1.5%, worse than a 0.4% decline a year earlier.
Well, overall, it seems to be a fairly satisfactory result. The IMF now, though, has lowered its growth forecast for the Korean economy in 2022. Compared to the outlook last October, it's down from 3.3% to 3% even. And that's in line with the forecast from the BOK and the OECD, but plenty of people say that even might be optimistic. Tell us about your outlook for this year, Professor, and your own view.
The International Monetary Fund, or IMF, on Tuesday slashed its economic growth outlook for Korea this year to 3% from 3.3% amid the fast spread of Omicron variant. This latest outlook is on par with the growth estimate of 3% by Bank of Korea and OECD. But Korean government put its 2022 economic growth outlook at 3.1%. The downward revision came as IMF forecast increased downside risk for the global economy this year, citing the accelerating spread of the Omicron variant, the U.S. and Chinese economy slowdown, and rising inflation. IMF lowered its 2022 growth forecast for the global economy to 4.4% from its October estimate of 4.9%. Considering the potential growth or full capacity growth is only 2.5% in Korea, some hopes and challenges are incorporated in Korean government's 3.1% growth forecast for this year.
Right. Well, Professor, in the markets on Wall Street, more pain on Tuesday. One of those sessions like the day before where there's a big decline mid-session, then tapering that. But we still ended up with a loss. For one thing, we're waiting for the Fed and the outcomes of its meeting. There's also the tension over Ukraine. The NASDAQ ending, though, with another decline of over 2%. What's the story in the global markets?
U.S. stock indexes tumbled, partly recovered, and then retreated again in a second straight day of the tumultuous trading. It highlights investor anxiety over the likely path of the Federal Reserve interest rate increase ahead of the central bank's regular meeting. Also, geopolitical factor of Ukraine issue also gave negative impact on U.S. stock market. The technology-heavy NASDAQ composite lost 2.3%, and the blue-chip Dow Jones Industrial Average lost almost 0.2%. Japan's Nikkei 225 closed down 0.4%, and Hong Kong's Hang Seng Index shed 0.2%. But European markets rebounded. London, Paris, and Frankfurt all gained over 0.7% Tuesday.
Well, the Korean markets today up and down as well. Retail investors still buying, but the Kospi not quite making it back into positive territory. A rebound, though, some bright spots in bank stocks and airlines, to name a couple. What's happening in the domestic market?
Korean stock market investors are undergoing a serious fears on the market's structural downward adjustment from the beginning of this year. Domestic market continued its fourth straight day retreat, including today. The main factors of recent drops are weakening U.S. and Chinese economy for more spread of Omicron variant and higher interest rate in both Korea and United States. The benchmark Kospi dropped 0.4%, and Kosdaq also retreated by 0.8% today. Particularly, domestic individual investors had different behaviors between Kospi and Kosdaq markets. In Kospi market, individual investors net purchased 220 billion won stocks, but in Kosdaq market, they net sold 150 billion won stocks. Most of the large cap stocks traded lower today, but LG Chemical, Kia Motors, and KB Holdings have moved up today.
Well, finally, Professor, in Korea, we have payments going out right now to small businesses affected by the strict social distancing rules that have been back in place since last month. There'll be more payments next month. Tell us about these relief payments and what effects they're expected to have.
The supports on economically vulnerable people became more important because the service industry like restaurant, coffee shop, retail sales, travel, and so on are all suffering still from government social distancing measure. But it should be pointed out that the cash support increase demands for all goods and services, which further stimulates already high inflation. Also, over 80% of supplementary budget, or 11.3 trillion won, will be financed through selling government bonds. So it means that government bond sales will raise the market interest rate further because government small loan increases the price of the loan, which is market interest rate. Since households are sitting under almost 1,900 trillion won debt, 0.5% market interest rate increase makes households to pay 9.5 trillion won interest more to banks, which is an additional burden, particularly to small business owners.
It could be a heavy burden indeed. Professor, we'll have to leave it there for today. Thank you, as always, for sharing your insights with us. We appreciate it.
Thank you very much.